Hey, what is going on, everybody? Welcome to another episode, Rapid Review. Rough start to this week, but we ended up finishing strong. Kind of reminded me of Rocky Balboa, round 14. No matter what happens to this market, it just seems like it keeps getting back up. It keeps pushing forward. And that's why we don't predict. That's why we look at all the information, find out what is normal action, what is abnormal action, and prepare for both directions. And that's exactly what we're going to do. So let's jump into this week's rapid review. All right, so let's get started. Market direction, uptrend, power trend, both still intact, both very, very healthy. Distribution days, there was no change to the distribution days. We started with 2 on the S&P, started with 3 on the NASDAQ, and ended with 2 and 3 on the indexes. So no change there. But something to note is on Monday, which is that 721 day that's highlighted in yellow because it is a pending stalling day. The distribution days are, I follow the whole method that Mike Webster and Charles House created in market school. It was back tested for many, many years. Their rules were really, really kind of uh, made to solidify what these uptrends and downtrends and when it is important to show certain kinds of data that reflects what could be happening in the market. So one of the rules is you cannot have, after the first stalling day, you cannot have the same amount of stalling days as you have distribution days. So that is why right now we have the 7-1 and the 7-7 are both distribution days, like standard distribution days. 715 is a stalling day. If we were to add to 721, we'd have an equal number of stalling and regular distribution, which cannot happen. So for now, that 721 day is pending, leaving that count at 3. If we do gain another distribution day before 1 falls off, then that stalling day would become active, pushing the count up, which would then bring it to 5 at that point. With that being said, in terms of days dropping off, you have the 7-1 distribution day getting very close to a 5% move off of that close, which would drop off that day. So a couple things just to kind of take note of in terms of the state of where we are at with distribution. As many people say, and I agree with as well, distribution isn't what it used to be. Ross Haber just mentioned this in his Trader Conference presentation, and I can definitely agree with that. To me, it is one of those secondary indicators that I look at next to price and some of the key price levels. But still something I like to take note of, especially if I see a clustering of distribution and some flat action. It tells me that there might be some higher probability of a decline coming from there with the amount of selling coming into the market. But other than that, right now, nothing really else to say, nothing super alarming in terms of distribution. When we take a look at what happened this week, the S&P was the leader for the week, up 1.46%, NASDAQ up 1.02%, and the Dow coming in second place at 1.26%. So definitely seeing what looks to be some rotation coming into the market. NASDAQ, which has led out the year, as you can see, with the S&P up 8.62%, the NASDAQ up 9.31%, the Dow up 5.54%. NASDAQ being the leader overall for the year, seems to be taking a little bit of backseat now to the S&P and the Dow, like I said, as we look to be seeing some possible rotation coming in there. But all three looking very, very healthy. Moving averages. We're green on every single moving average. S&P, NASDAQ, and the Dow, all moving averages sitting in the proper order, 10, 21, 50, 200. So that's all in order. The Russell still has the 200 sitting above the 50. But as I say every week, this is just something to look at and see where we've gone right now. It does not necessarily give us an idea of where we're going to be going into the future. But this just showing we are in a healthy uptrend. Everything has been moving, in the right direction if you are a bull trader. But yeah, always like to take note of this, green on everything. So let's jump over and take a look at the indexes. So we zoom in here, you can see we had that stalling day that occurred, or stalling action that occurred on Monday as we made an advance to possibly all-time highs, and then kind of reversed, closing barely up for the day with higher volume than the prior day, giving us that stalling action, which led us to believe that the next day was likely going to be a down day. That was what we would expect. And that's exactly what happened. Tuesday was a very, very rough morning for many people, especially if you're heavily invested in growth names. Though we only did pull back to that 10-day simple moving average, and we found support there. And this is why it is important to have sell rules and know where your kind of lines in the sand are so you don't get emotional, because a lot of people sold emotionally on that huge, huge rough morning we had on Tuesday. Though we were able to quickly find support at that 10-day simple moving average and recoup some of those losses, still closing down, but only down 0.39%. So again, rough day, but overall, considering how that morning felt, pretty positive reaction when we found that support really at the 10-day simple moving average. And then we kind of just climbed higher. And this is kind of what we saw with a lot of those growth stocks throughout the week. Many of them, not to the 10-day, a lot of them to the 21-day, many of them also breaking that 21-day intraday, then finding support at that level and then climbing back to what was all-time highs for many of those stocks as well. So again, real big things here in terms of the overall uptrend, the support at the 10-day, super positive action, the volume coming in a little bit towards the end of the week and us finding all-time highs. And then on a stock level, just seeing these stocks pull back, which again was somewhat expected, and then continuing higher from there. Positive action in terms of looking at the overall trend continuing upward. We'll take a look at the weekly. You can see the volume coming in this week. So closing near the highs, up all-time highs, volume coming in. So more buying coming into the market, positive action in terms of the trend. On the key levels, big thing to look at, those really have not changed. The 10-day, which is just something to kind of keep an eye on. I don't think if we break below that, it's anything too concerning. Really, it's focusing on that 21-day EMA is the real level that I'm keeping an eye on. So watching that there. And then underneath that, it's looking at the December 16th, 2024 high. We can maintain above that because we kind of broke out of that long-term consolidation and maintain above those levels. That would be positive. If we break below that, a little more concerning. And then obviously the 50. And then on the upside, very simply, we're just looking to continue to make those all-time highs. So yeah, like everybody said, we are very extended. Don't get me wrong. This kind of pullback, shakeout, whatever you want to call it, isn't what we were hoping for. We're hoping for maybe a little bit more of a pause, a little bit more of a pullback. But the market really doesn't care. The market's going to do what it's going to do. And our job isn't to hope or predict. It is to just do what we can with what the market gives us. We'll jump over to the S&P. Really, really similar action here. Like I said, the S&P showing a little bit more strength. Actually, when you look at every day, it was actually green for the S&P. Also found support at that 10-day simple moving average. Like I said, a lot of the stocks in the S&P index, we saw those kind of performing much better than some of the NASDAQ stocks, but not much else to add here because, again, very, very similar action, hitting those all-time highs, and the key levels are going to almost pretty much identical, except we're looking at the February 19, 2024 high as that other alternate level besides those moving averages. And we'll just quickly flash over to the weekly so you can kind of see that. Again, closing near those all-time highs, seeing above average, higher volume coming in, all positive action for the long-term direction. So again, also still very extended, still would like to see a pullback. But one of the things that I really wanted to note is this market reminded me very much of the 2020 kind of bull trend. I should probably zoom out a little bit more to get all the way back there. Where are we at? 2022. Here it is. All right. That should stand out a little more to me, right? All right. So looking at this 2020, this is where we had that big dip right there. And just to give you guys some context, if we went to the ultimate low to the ultimate high, the market went up 82.07%, 163 trading days. A very, very strong move. And if we actually look, let me take that off for you guys. The market really the entire time only closed below that 21-day EMA one time. And it was just ever so slightly below. Intraday, we had some of those breaks there, 100%. But we really rode that 10-day moving average up there pretty much. We barely tested and closed below. And like I said, we only had that one day and that whole entire uptrend that we closed below the 21 EMA. Something to take note of. I'm not saying that this is going to repeat itself, But when everybody says this market can't go higher, and I'm not saying that it's, everybody that you follow or that that's you yourself if you're watching this, but the consensus that I hear from a lot of different people, especially people who aren't um, doing what traders like most of us do, is they're saying this can't go higher, this can't go higher, this has gone on too long, this makes no sense. And that was the same conversation that was being had in 2020. And where we are at right now, so like I said, this is an 80% move. We're about, let's see, I believe it's like 106 days somewhere from the very bottom. I think it's somewhere right around, just say give or take around here. There's still almost about another 30% move that happened from, if we compare where we're at from bottom to now on the current index and where we're at from bottom to that same time frame on the NASDAQ back in 2020, another 30% move. So to sit back and say, like, I'm done, I'm pulling my money out, this can't go on any longer, you could be sacrificing another, huge move by the indexes, what could be maybe even another 30%, which could be even more within your stock portfolio, depending on the types of trades you're making and how your entries and exits are working. So something to really, really just remind yourself of. This is why I constantly say that we're not here to predict. We are just here to do with what the market gives us and have a plan for what is normal action on the upside and on the downside, and what is abnormal action and how we need to take action what could be a possible directional change, whether that's higher or lower, whatever that may be. So I wanted to just kind of note that. I had kind of shared that on X prior, but I wanted to kind of reiterate that yeah, this could just keep going up and up. We may not get that pullback that everybody really wants to really reset things. And that's why you just have to be prepared for either direction. All right. So with that being said, let's take a look at what's going on with the industry groups. We kind of mentioned it over there before. The growth stock names definitely seeing some damage this week. Really looking at, this is 1 day, 1 week right here. Looking at the growth stocks, the semiconductors, the blockchain, airlines were constantly up there. Yeah, you're seeing that was the laggards for the week. And really the strong moves for the week were the home construction. I saw a lot of stuff out looking good there. Those miners that have done very, very well this year, and a lot of the gold and stuff like that doing very, very well. Solar still showing some strength as it kind of turned off the bottom. But definitely, again, in this screen, seeing that some sort of rotation occurred this week, and we'll see if that can kind of continue. For the 1 month, which is where I try to focus a little bit more, look, solar's still looking strong as it made that turn off the bottom. You said the home construction looking good, but growth still up there. So, semiconductors still positive. So a lot of these still positive, but just be conscious of, if we are starting to see some sort of rotation, if the NASDAQ really, really, truly starts to lag, that could make trading with some of those growth stocks a little more difficult than it's been. So something to take note of, and really, really just be prepared in terms of if we're seeing some sort of rotation. So let's talk exposure levels. I try to bring this up every week because I think it's extremely important, and that's a lot of how I trade, is understanding what the market environment is and understanding the probability of a trend continuing or turning over, things like that. And up until this point, I've been saying, like, I think 100% invested is where you want to be. And I would probably argue, depending on the position of your stocks, there's no reason to step away from that at all. Just, again, understand where would a normal pullback be in some of your stocks. And for stocks that are super, super extended, if you don't think that you can handle mentally or even equity wise that big pullback to maybe even the 21 or even sometimes the 10-day, might be important time to pull some money out so that you can stomach that, can handle that, to be able to ride that overall trend. It's important to keep those emotions in check so that you can make proper decisions. And if you have a giant position that's super extended off of 21 and that stock pulls back 10, 15%, the likelihood that you're going to make a rational decision could be very, very slim. So keep that in mind. For those margin traders, look, I don't really trade much on margin. It's just not part of my game right now. Something I'll probably work on in the future. If you have a plan, stick to your plan. But for me, as I'm looking at it, if I did trade margin, I just think with how much and how far extended this market has gone without a pullback, there's some extra added risk, and margin brings extra risk on top of that. So for me personally, it's definitely, as the little margin I do ever use, I am staying off margin because I just know emotionally if we do get a big pullback, that's going to be a little more damaging, a little harder to me to properly handle my stocks. So play your game. But again, uptrend, things are looking good. A lot of those stocks that got hit on Tuesday rebounded really, really healthily, if that's even a word. But yeah, that's my exposure level kind of outlook. And also be aware. I'm surprised I can't believe I haven't mentioned this yet. Earnings season. We're going right into like the peak of it right now. We had some big names report this week. It's important to know when the stocks you own are going to be reporting earnings, and the stocks on your watch list, when are they reporting earnings. But on top of that, something I think some people don't talk about is understand in the industries that the stocks you own are watching, the big names in that industry, if you don't own those or you're not aware of those, when they are reporting. Perfect example, if you own semiconductor stock and NVIDIA is reporting, there's a high likelihood that your stock's going to more likely react to NVIDIA's earnings. And you may say, well, why did this stock jump up a lot? Why did this stock dip? And sometimes it's due to one of the bigger players in the industry reporting earnings and reacting to that, and then the rest of the industry reacting with it. So on top of knowing the actual stocks that you're looking at and actual stocks you're holding when they're reporting, understand where the big players in the industries that you trade are also reporting. Extremely important. So final thoughts. I've said it a couple times. We're here to just look at what's on the screen, understand what the overall market trend is telling us, what's normal action, what's abnormal action, and having a plan for both directions. We're not here to predict. Like I said, I kind of just wanted to show that 2020 example because history does repeat itself. Doesn't mean it's going to happen, but I remember that very, very specifically. And I remember what was going on during that market. And a lot of people that I know that were stepping aside saying this can't go higher, watching the market continue to go higher without them. But at the same time, then towards the end, people that said this is just going to keep going and not understanding that that's not how it works either, and not being prepared for when things do turn around. So yeah, the market's going to do what it's going to do. And our job is just to take whatever money that we can get and when it's given to us. Other than that, don't really have much else to add. Yeah, that's basically it. I appreciate everybody joining. If you're watching on X, YouTube links up there. I put these on YouTube and stream on YouTube as well, working on some content also to produce on YouTube. If you're watching on YouTube, there's my X account. Post a lot of stuff throughout the week. You can kind of check that out. Link in the description. That is for Discord. We hit 1,000 people in our Discord. Huge shout out to everybody on Discord, because this Discord channel would not be what it is without all the stuff that you guys are putting in the chat. I share my stuff, but the overall contribution from people of all different levels, people asking questions that are in their beginning phases, to people who are professional traders answering those questions and sharing some of their thoughts on what's going on in the market, makes the community what it is. So I appreciate everybody doing that, because it's also helpful for me, and it's also helped me improve my trading. So thank you guys. Super stoked about us hitting over 1,000, and look forward to the future of that. And if you want, there's my email. Feel free to email me. I do check it. So if you want to send me something in terms of bigger, longer question, or taking a look at this and you don't want to do it in more of a public forum, the email is a good way to reach out to me, as well as direct messaging on X as well. But email probably something I see and check more often. That's all we got. Enjoy the rest of your week. Traderline conference going on right now. So if you're closing this off and you're watching right now, definitely hop on their YouTube channel and check out a lot of great traders that are going to be presenting this weekend. A lot of great information. And you can also go back on their YouTube channel and check out their kind of past interviews and past presentations. A lot of good stuff in there. So many hours. It's all 100% free. They are raising money for St. Jude. So if it's in your funds and capable, definitely a good cause to donate to. And last thing in terms of the trader line is I am a Deepvue partner. I have a link both on my X account and also in my YouTube description if you want to check out Deepvue. It's what I use for showing you guys those industry groups. It's what I use for all my screening, chart analysis, fundamental analysis. It's basically the core tool of how I trade, and is pretty much game changing when you compare it to a lot of these other tools out there, especially for the people who look at fundamentals and technicals like myself. It's an all-in-one tool. So super, super happy getting a chance to partner with them. And yeah, there's a 12% off coupon in there as well. That being said, they are pausing new memberships right now. So definitely join the wait list, and they'll get to you when the spot is open to get you on there. Last thing I'll say, sorry I'm going a little long-winded here, but wanted to make sure I make this statement. I should probably make this also a separate video. The fact that in the height of their attention, where the trader conference brings a ton of traffic to them, they decided one of their money makers, they're going to put it on hold and focus on making this tool run at tip-top shape for everybody who already has it. Shows to me that they're not here just making money. They're here wanting to actually produce a tool that is the best of the best. Anybody who's in business can understand that. To stop taking in money to just improve a tool for the people who are already using it at the height of your peak attention and traffic, normally, not normally, but often for the year, it just speaks volumes about what that team, Ross, Richard, Rye, and Nick, think about this product. They want to make sure it's the best, and they're focused more on that than just profiting. So huge shout out to you guys, and that's all I got for this week. Try to do this every single week, and hopefully it's helpful. If you do find it helpful, let me know. And that's it. Happy trading and stay disciplined.